The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Basil Chapman, Tiger Technicians Hour. It's my pleasure to be here Monday through Friday, 11 o'clock till noon, of course, right at this time at 877-927-6648. This is the pre-evening or afternoon at this particular point show going in to tomorrow night's opening call webinar. Let me show you right here. Opening call webinar for subscribers by Basil Chapman, editor, Wednesday, March the 30th, 2016 at 6 p.m. Eastern Time. 90 minutes. There's a lot to do, an incredible amount to do. What is it called? The coming 3 months in the market and where we are in relation to matching many aspects of the late 1920s, sponsored by TFNN.com. And what will we cover? We'll be covering a lot. This is just a glimpse. We will cover, number one, March monthly candles, the implications. Sectors that are favorable and unfavorable. I could not believe, as I'm going through this over the last, many weeks, but certainly the last couple of days, and then again last night and this morning, how many sector stocks there are at all-time highs. Why are they at all-time highs, especially sectors where, if you had asked me fundamentally where these particular companies would be looking out, I would have said on a fundamental level that area is just passé. It's finished. Why would you even be looking at it? But you do your homework, you look at the charts, and you can see why. Now they're becoming quite toppy. Sectors that are favorable and unfavorable also means we'll be looking at what was, what is, what has been completed, done, what is new, and how can we benefit? We're going to be looking at the relationship of commodities to the market. That is, commodities to the equity market. What does it mean? What's going on? Is this consolidation that we're seeing right now, is that it? Look at those monthly charts, for some of them certainly looks like it is. And then you look at other monthly charts and say, that was a spectacular end of January into February and then March. Relationship, as I say, to commodities is also the aspect of transferring. There's just my wife always likes to say, you're looking at politics. It's just the same amount of money being transferred from one party to the other and then back again, it's just nothing really changes. Just the money goes from one particular favored person to the next. And that's kind of what you look at in the stock market. After all, there's an X amount of money. It's not an unlimited supply. When you get into market tops, it becomes an unlimited supply for a period because people find whatever it is to sell to be able to put into the fad or whatever it is at that particular time. I'll be looking at the index and stock patterns that we're going to follow. And we have always followed, and I'm going to be following even more closely. Sentiment indicator, the VIX volatility index. I've used this every single day. Let me just show you right here. Every single day, I show this particular chart right here, and I followed it up with a lot of commentary about what we're looking at. Spoke about the VIX index. It says right here, peak D. Slide over the 1530s. The market slips. Where is it right now? It's at 1542. Under 1440s, it rallies. I like to make it as clear as I can every single day what to look for. Talk about the volatility, the trend index. Now, here's another thing. My short-term trading index just flashed again to say that we should have within one to two sessions a 7 to a 9 point or even more move in the S&P futures that would translate into the cash indices moving higher. Not always at the same proportion, but usually it is a rally that can then fade at the end and come back again. So this is going to be very interesting, right? Let me go back to my story here. the continuing late 1920s match. I cannot believe how many aspects are coming together to match. Does it say that we have to go into a 1930s depression? No, it doesn't say that, because so many things have happened since the Great Depression to put in certain barriers, certain cushions, certain there's been an effort to ameliorate something like that. But we know that when major market crashes occur, all those things get thrown out, maybe with the bathwater. Then I'm going to do the live charts and answering your questions. You can start sending questions to me at Basil Chapman at TFNN.com. Start sending them now. I want to deal with them as we move along. I like to deal with questions as they occur. I might not be able to do that. I might have to have a certain period after I finish my this formal part of the presentation, and then I have time. We'll see. How it relates to the Chapman wave methodology and wave count in the Dow and the S&P 500 and its potential to Elliott wave. In fact, for my subscribers, we've already started positioning ourselves regardless of tomorrow night's webinar, even though I want to have tradables from the webinar directly the very next day or within a day or two. We've already started positioning ourselves for some certain possibilities. All right, let's get out of that. So the Dow right now is down 38 at 17,496. The S&P is down 3 at 2,033. Let me move over here. The comp index is up 12 at 4,778. This is fascinating because the NDX and the NASDAQ, very large composite index, have not really participated as well as the Dow. Dow's been one of the better indices lately. So we're going to be watching this real closely. The VIX is up at 14 cents. Now it's at 1538. We've got the E-mini futures down 325, made a peak F/B. More and more, it's looking like it could be at a peak F, but I always have to wait for the price movement below the 9-period moving average, as well as the MACD and the stochastic, slow stochastic, to be able to put a down arrow. But the 120-minute chart you see here has already arched over and is holding beautifully that trend line support. All you need to do is learn how to use trend lines, because they can be really important. And here is the weekly chart as I move the 120-minute chart away. So we want to finish up our little preamble. Look at that resistance. Look at that Chapman wave inside track resistance area. The S&P has not been able to break above into the 2060s. That would start to indicate that as a breakout, and you should be going towards the 2100 level. A breakdown would say that under 2016 is a real problem. Okay, that's the E-minis. Now let's continue. The QQQ series, holding quite nicely. It just wasn't the leader. Now it's holding the 9-period moving average. It's holding above the 200-period moving average. The 9 has crossed the 200. That usually says you can go up a little bit further, but you expect to see a very choppy period coming up. That's what I'm expecting. And still a leg A, single leg A, a beautiful single leg A in the weekly chart. But remember, the weekly chart did, in that August 24th plummet to 84.74. That really was like a crash. I mean, I don't know, it was resolved within an hour and a half. But look what we've got. We've got the 9-period moving average of 105.18. It's at 107.47. Just real quickly, gold is at this particular point, gold is up 6 at 12.28. Held that trend line. Remember, one line can teach you so much and show you so much. Peak D in the weekly chart, and you've got crude oil as we're about to go. Crude oil is down 1.5, and I'll talk about the TLC when we get.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new market-safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. So this is what I want you to do. I had a number of questions, and I'll get to them in a second. Let me just do this. The TLT, I do not like when there's a buy mode that goes, a buy signal that goes to a buy mode, and all you get is peak A, B, C, D, but it's the tiniest little rally. Look at this. The bonds are within this cup formation, stuck between lower highs and lower lows, attempting to make a higher high and higher low sequence. And what does it do? The MACD and stochastic are really good. On balance volume, a bunch of things are really good. And all it does is it goes from 127.21, let me just type that in, 127.21 to the high of 3 days ago, which is 130.64. I mean, that's like nothing. I want to see a 10-point move if it's going to be doing something going to a D. So this is, in a way, it's disappointing. We're not trading, so it's not disappointing in that sense. But I'm looking to see whether or not the TLT is able to make its way to the 132.5 to 133.75 area, because if it does that, all of a sudden, that leg C and peak C that was made back in, that was February? Yep, February the 12th, the week of the 12th, at 135.25. Hey, all of a sudden, it looks like you could get a D. If you get the D, you've got yourself an E/B in the monthly chart. And that goes towards my contention. And I don't know what Yellen's going to be able to say. My contention is that the job scenario is improving. It's proving probably from the lowest strata, wherever you go, CVS's and all that, you're seeing help wanted signs for ages now. Even our local star market here, signs, good jobs. So that's on the lower paying strata. What's happening in the higher paid strata is that as you get to the very, as I understand it, just from hearsay and what anecdotal, in the higher regions, you can start naming your price because you're very much in demand, but it's that middle tier, very big middle tier. That's where you want to see the big job growth. So I don't know if that's really working. And that's something I'll touch on tomorrow night. But most importantly, and this goes to the whole interest rate thing, because if there is demand in that middle tier, that demand is going to be in housing. I'm going to be looking at housing. I'm going to talk about what has happened thus far. and what can happen going into the next 3 months, and what's so important about interest rates. Remember, I'm talking about interest rates. The Japanization of our interest rates has been going on for a long time, going to close to zero. The competition for low rates is huge. So I don't see how the Fed can independently start a move up. They want inflation. They keep talking about inflation. So that would say that when you're looking at something like a gold, excuse me, if you're looking at gold, then this consolidation that we're looking at right now, let me show you the weekly chart. What's so important about this is that the rally was not able to take out that very important high from back the week of the 23rd of January at 1313 on the continuous contract. It's been stupendous up until now. Stochastics at 82%, the MACD's starting to pull back. But if gold breaks support, I would put that key support right there. 1193 to 1180. If in any time in the next couple of weeks that support goes, you've started to impact not only the weekly from a peak D, that stochastic is going to go under 80% and drag the MACD down. So I'm watching this very closely. Personally, we really would like to see further gold action to the upside because there is room for some inflation here. But when you look at crude oil, and there's a question about crude oil, this is nothing. I mean, this is it's not just pathetic. It is very, very weak. So I don't see exactly what's happening from that peak F top that was made in the daily. If it holds the 37.50s, and then by Tuesday or Wednesday of next week, you're looking at crude oil in the 40 to 41 area, I'd say great. That's the first sign that the weekly chart is showing some stability, and that you're able to move. You're able to move a little higher, and that's going to be very important in terms of this whole inflationary aspect. Question about the XLE. The XLE made a peak D, did not get to the 200-period moving average, the S&P Select Energy Spider Fund in the move up. Now you've got the 200-period simple moving average crossing under the 200-period exponential moving average, and that means it's a very important period because I would like to see them both moving in an upward trajectory, and the simple moving average not crossing negative, but actually starting to move higher with the 200-period exponential. And that way you've got a parallel movement that says the magnet now is towards pushing crude oil, the XLE, towards not 60.59 down 91 cents right now, but towards the 64, 65, 66 area. I think when we get that, it's going to be a different issue completely in terms of what we're looking at in that whole complex. I'm just going to show you the OIH, also pulling back from that peak D and the H pattern that failed on the left side. This is just a really important moment all the way around. I will be talking about that question about or statement about the IWM. That's the Russell 2000 trading at the high of the day. There's a real mixed market here, and this mixed market is going to be the reason why over the coming days going into the end of the month on Thursday, you could see some stability, some support at the base level here for the S&P and the Dow, and how these IWM, the QQQ series, act and react if there is in fact a rally in the larger indices. Do they then go back to failing? That's going to be the question. So, all right, I got that out the way. Now there are a couple of things I want to look at. Question about, so what was the other one? XOP. Was it, did I look at that as an index? No, XOP. Yes, there it is. Spider, S&P Oil and Gas Explorer. That's the same as I looked at before, like the OIH. So very important. I've got left side, right side price time match going to, it's at 28.98, going to 27.45, and that should be by the 1st of April. And if it doesn't get there, but instead breaks above 29.80 to 30.20 in the next 2-3 days, that's going to be a really good sign to say, we're finding support now in the S&P oil and gas exploration area. A question about the UNG. UNG is up nicely. It's up 9 cents at 6.65. And under these conditions, I think what we're looking at here is oil. Remember, there was a question in the den about oil UNG not following the oil. Sometimes they go in opposite directions. There was a theory at some point that said if crude oil comes down, it gives the opportunity to natural gas, United States Natural Gas Fund we're looking at right now, to be able to rally. I'm not sure what the relationship is. Just something I thought, hey, that's a good commentary. I always like to look at inverse action. The Dow, the dog, the DIA, the dog, the SH and the SPY, the VIX index, and any of the indices you're looking at. I like to see that mirror image. How does it work? All right, now we've got a couple of things that we need to look at. I'm going to be talking about this a lot tomorrow night. General Electric had a spectacular move. It bumped into resistance on the left side from January at 31.49, down only 14 cents. IBM, just a little bit down. Triple M had earnings out, down 2.47. I'll talk about these when we get back in UTX. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
For a couple of commodities, remember I spoke about the different commodities last week and an ETN that we had that was based on a number of different commodities. And look at this. Soy contract, the continuous has gone to a leg D above the 200-period moving average as the 9-period finally crossed the slow-moving average. That says you're in for a little bit of a whippiness. It doesn't say sell signal or anything. It says just be careful. Yeah, it's in leg D. Good chance at 912. It's up 3 in leg D. It could be. I wonder if that's a peak. Let me just check. The high was 6/8 yesterday, 6/8 today. So yeah, parallel highs. So this just says be a little bit careful here because there could be a pullback. Stochastics flat and good. In 88%, MACD is good. So I'd say 904 to 899 would be your risk at this particular point on the pullback. Sugar was making that D. It's still that peak D right there. Going to be pulling back right now. These are the daily charts, and the daily charts affect the weekly charts. And weekly chart is in leg D after a big pullback from C. When it goes to a D after a big pullback in D, that D can actually hold very well and even go to an E. We've seen that before. So I'm going to be watching the SB's sugar continuous contract. I wanted to look at the W. Wasn't as good at all. It's nice a session today. It's trying to rally, and it needs to get above the 479.5 area from the 14th for wheat to continue higher. I also want to do a couple of things here, and I wanted to go to bonds. I wanted to show you something. In the bond area, it's the same as the TLT. A sideways move with higher highs and higher lows, that's good. MACD is crossing positive. Stochastic is at 59%, not that great, but it is moving higher. And yet bonds haven't really kicked in. And my contention is that if bonds start to rally sharply, it's going to suggest that yields will come down, obviously, but the stock market will be vulnerable to downside moves. This is my contention at this particular point. If bonds start to break down, and after this leg D and maybe a peak D in the TLT, if it goes above 130.64, it doesn't even have to do that. It could fail right here. If the bond, I go to the TLT because most people have the TLT on the computers rather than the continuous contract. So the TLT at 130.35 up 64 cents. If at any point it breaks under 129, if it really closes under 128.70 between now and Wednesday of next week, Tuesday, Wednesday, that's going to suggest that that bond, the yields could go higher. So we're going to be watching that quite closely. Now, I wanted to also do, so home prices rise, thank you, reflecting the Dan, rise a steady 5.4 in January. That's the case Schiller. I want to look at here we go, so that, see, this is where it becomes a little difficult in the Chapman wave to not just make a decision. The decision is easy. To formulate a trading aspect, because you do need parameters to be broken. Let me show you why. The MACD is just dipping, but it hasn't closed negative, it hasn't crossed negative, but it is now showing a little bit of that there'll be upside, a lot of upside resistance, and the stochastic has just dipped under 80%. Meanwhile, the HGX, the Philadelphia Housing Sector Index, has basically walked the 9-period exponential moving average. Gone from 184.50 back in February the 11th was, all the way to the peak D high that was made in a left side, right side price time match on the 18th of March to 228.36. Hey, 228, that's, we're talking about 40-something points, 44 points. Very good. And then what happens is it pulls back, holds a 9 EMA, squeaks to a leg E. I can call this a new A, but right now I have to call it an E because of the technicals. So that says the next couple of days are going to be very important. I should say the next price movement, it might not be a couple of days. It might be one day, it might be 4 or 5 days, but it's just real simple. If after this move, there is a 227.46, if the HGX actually pushes, spikes already, can't just push. It has to spike above the high that was made on the 29th of December, 231.86. If it does that, if it pushes above that, I have to consider there's a recycle here. And it also means that the stochastic probably in the weekly chart will go over 78 into the 80 area. And that's a good sign. So far, there's nothing negative that I'm looking at in the HGX index, but a close under 222, 5.7. We're talking about 5 points up or 5 points down. 5 points down, a close below that. Certainly a close below 224.79. The low that was made on the 24th, just 3 days ago, says that 220, 200 period exponential moving average in the daily chart is going to be really important. So those are levels that we got. So I had someone say, a good statement. Please, let's not just have levels to look at. Let's have positions to take. I will take positions as soon as I'm very comfortable. We've already started taking some positions. They just starter positions, tentative positions right now, but it's showing you my bias. Okay? So I wanted to get that out of the way. I'll be talking about the HGX index in greater detail tomorrow. Then, of course, there's also the home builders, a whole bunch of things that go with that. So here we go. We want to be looking at this particular point. Look at we're looking at, good grief, why did it just slip my mind? I can't even remember what the acronym is. Oh, Netflix, let's go to Netflix, NFLX. Netflix, good move, up to at 103.30. That's A, beats in leg C, new leg C. Weekly chart is, funnily enough, in leg C as well. But the monthly chart is still saying to me, hey, it's got a hat-trick top, peak D. It means that rallies are bound to fail very soon. That's the way I'm looking at it. So Netflix, good action. The next level of resistance in the 105 area. And the MACD is improved. It deflected higher. Stochastic still only at 67%. So what have we got here? I want you to look at Facebook. Facebook, amazing. I haven't seen a chart like this. I've got, I wouldn't say perfect memory in terms of chart patterns, but it's really close. I look at patterns and I say, yep, I know that. Sometimes I won't remember the stock or the index, but I'll know the pattern really well. So Facebook, this pattern without that peak E, very quick peak, A, B, C, D. Remember when you can make very quick peaks, there's a chance that when you get a pullback, you'll get a pullback. It won't be the end of the line, but it says a quick, sharp pullback, and you got that from peak E at 110.55 on the 2nd of February, comes back down to 104.40 on the 8th, and then it starts a brand new A, and this is, I have to call this a brand new leg B, but it is really a gray B. Why is it that? Because it's underneath the previous major high of peak C, that Eiffel Tower that went from the 89.37 area all the way to 117. I mean, that's huge, and gapped up, and then had an island reversal to the downside to 96.82. That looked like that was the end. That was it with Facebook. But no, Facebook is the current crop of 21st century stocks, the General Motors of the 21st century, together with a Netflix, Google, etc. Or Alphabet, if you have to say Alphabet. Whew, I can't say that. It's very hard. But I've got leg F in the monthly chart with just 2-3 days to go. I'm wondering, is this going to fail? Is Facebook going to fail? Well, we won't know until Facebook breaks 109. It's at 114.90. And if Facebook takes out for leg D, the high of the week of the 2nd of February, 170.59, that's going to be very interesting. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi folks, 10-minute chart is showing that there's an attempt. This is a brand new A, B, that would be leg C if it goes up above 26.75. And 2028 is going to be the real test for the 10-minute E-mini in the cup formation if it's able to get there. And if it gets there, it actually should be fairly soon. So, okay. Now, let's just go back. Questions I had, EEM. This is the Emerging Market Index. The way the MACD is acted, the way stochastic is acted, I'm calling this G for now. Obviously, it could be recycling. It didn't get to the 200-period moving average. It's having trouble with the 9-period moving average. So all I can say, EM at 33.38. The question is, would you go short? Would you go long? Now, that's something that I used to do in my own trading. Not often, but I used to do it enough to say, and then I learned to say to myself, wait a minute, if you could go long, or you could go short, it means that you really aren't sure. Wait for the parameters that you need to look at to break and then make a decision. Don't arbitrarily say, yeah, I could go short, I could go long. That was a big lesson for me that I self-taught. And that was one thing. Now, the quick thing I wanted to do here is just the EM at this particular point. Where am I? My bias is to be looking more towards a pullback. I wouldn't short it, but a pullback. And the big thing is, will it hold 32.20 if there is weakness? Or will it try to test 33.90 is the 200-period moving average? If it breaks above that, that's very good action, and I would be looking more towards the long side on the next mini pullback. That's the EM. One other question is J&K, and I'll go to our callers right now. J&K peak E. So many stocks and indexes have made these peak E's in the daily. The weekly is really supporting quite nicely. It's trading at 33.91, down 7 cents. The Spider Barclays high yield bond ETF. So what would I do? I'd have to wait just a little bit. I want to see if there's a pullback towards the 33.60, 33.40 area, and then I'll make a decision. I will keep it on my radar, but at this particular point, the weekly chart is saying if you are long, stay long. The daily is saying if you are long, be a little careful, put a stop in around about 33.30, because if it takes that out, you could go quite a bit lower. You want to see it very quickly go above 34, 35, 34, 52. That'll be really positive action. All right, let's go to our callers. We've got Charlie in Framingham. Charlie, how are you?
Hey there, Basil. Charlie. Hope all is well. Nice weather today.
Yes. It's, I think we're there. I usually feel that as soon as February's done, we're on our way. That's the way I look at it.
Absolutely. Hey, listen, UGAZ, I'm in it. It's doing pretty well. And I sold half my position this morning because I got nervous. What's your take on it?
Well, this is very interesting. I'm just going to go to the UNG for a moment. This is UGAZ's, the 3 times long natural gas ETN. I want to go to the natural gas 1-to-1, the UNG, United States Gas Fund. Nice action. You know, I also looked at it and I thought, wow, should we put it in my opening call, in my newsletter as a buy this morning? I probably should have. And the only reason why I didn't, there was just a moment where it was starting to pull back, and I didn't want to take a chance because if it stalled at the 9 EMA of 653 and then started to pull back, that would say, oh, be a little careful here because it's going to mess up the weekly chart. Now it's starting to look very good. Hey, I have to congratulate you. That's a really nice move. I want you to just do this UGAZ on my 10-minute chart. Okay. So this is a new A, B, C, D, leg E. So it's trading at 24.75. You've already taken off some. So I'm going to suggest to you, because the action that we saw yesterday and the action thus far today is actually very nice. It's really very good. And suggesting that there's going to be a test of the 688 high that was made on the 17th, I'm going to recommend that you halve your position that you've got left. You try to keep as much as you can as your core position. And even there, I would put a stop. So you're already out, and you got out probably at about 652 or 655 or so. Is that right?
No, actually, I was UGAZ. I thought it was like 24.
Oops, I'm sorry. Yeah, you're absolutely right. I'm going to do the same. You're right. I thought I'd already switched. I hadn't. You got out at about 2280 or 23.
No, I got out half my position at 24, about 23.99.
Okay.
Today.
Well, if you did that, which was way off the actual low, the opening 22.78 low, that's really good. What I'm going to suggest to you is that you take 1/3 of your position and you use the stop. You exited at say, let's call it 24, round number. I would put a stop of the rest of the position. I'd halve it, and that half, in other words, a quarter that you've got left, I would put that quarter with a stop of about 24. Let me just go back to this chart here. 24.20, maybe 24.30. And the rest, I would try my best to hold it into tomorrow and the next day. Why? Because the pattern that we're looking at suggests that if there is a close above the candle of the 21st with a high of 24.89, then there's going to be a test of yesterday of the candle of the 18th, and that has a high of 26.95. I like what's going on as we're looking at it right now. But for me, the most important with the whole natural gas situation is I need to see leg B in the weekly chart by Friday. I want to see above 2.033. In your case, it would be above 27.01. Wow, if we can get a close there, that's going to say, well, this is the first time in the weekly chart it's actually made a leg B ever since UGAS broke down. Oh, my goodness, since May of last year, when it was 305. Oh, my goodness, it was 3. Oh, well, this is the UGAZ. This is the ETN. This is this shrinks like you. Actually, you know what would have been great is if you had shorted it at $300, right? So, all right, I think you're doing exactly the right thing right now because you got out. You're using nice money management here. And why don't we try the same thing with halving the position of the half that you got left? Trading stop maybe on one part of it. You can use a stop of, say, 25 cents or even 30 cents. And the rest, you just want to see if you can push it as high as you can. Certainly a close above already the high of 25.07 today would be very good action. I like it. I think you timed it beautifully.
Yes, thank you. Finally.
I know what you mean. But you know what? It is a 3 times long. And for you to be able to learn how, it's almost like playing a game, a sports game. You just want to practice that move over and over so it becomes second nature. So trading the 2 times is difficult. Trading the 3 times is very difficult. But it should be the same process because after all, if the root is going up, then the other peripherals should do the same thing. But it's very hard because of the percentage speed of being right or wrong within seconds. So I'm just going to say to you, nice job. Let's see if you can hold this all the way through until maybe Thursday or Friday. Give me a call and tell me how it went.
I will. Thank you.
Thank you very much. Charlie in Framingham, Massachusetts, UGAZ. Nice move up, almost 6% at 24.58. Couple of things I want to look at. I'm going to spend some time tomorrow night on the volatility index, the VIX index. Trading at 1550 now, it's down. Yep, down 9 cents. So we've got a break coming up. I think I've covered almost all the questions I had in the email. I think I did the crude oil as well. I did. Oh, high-grade copper. We'll do high-grade copper as soon as we get back. Basil Chapman, Tiger Technicians Hour. I've got an alarm clock. The buzzer, not alarm, a radio. It keeps going off. I haven't figured out how to get it off, but I'll do that right now. Yeah.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
I've got a great program today. We've got starting up at 7 o'clock, going all the way to 6 o'clock. Check your TFNN calendar there. It's just fabulous programming. So let's just look at the, that was the E-mini, just real quickly. E-mini had an inside buy. Remember, look, this is peak A. You'd think that was peak B, but it's not, because there was an inside lowercase a. You got to count each peak. And then the B was underneath or exactly the same. So that becomes a B. That becomes a C. And what did I say? This is going to be so important. 2028 right there. 200-period exponential moving average. So, all right, just wanted to do that for now. And let's go on. So FCX was a question. I've got peak G in Freeport McMoran, copper and minerals. And that monthly chart, it's going to be so important Friday, how we close. At 969, down 46 cents. I do not want to see 878 broken, because that's going to say, the whole thing's over with these commodities, at least for now, until there's a whole new rebuy. So, and Yellen talking, what is she going to, politically, the Fed, we know that the Fed is never political, right? Yeah, sure. So the Fed doesn't want to mess anything up, number one. Number two is they're on track now with the idea that there's not too much going to go on at this particular point. So she's disruptive if she talks about higher rates, and she is not disruptive if she talks about not doing anything. She's disruptive if she talks about lower rates, which she won't. But if she did, that's going to set off a whole new series of buying and much more volatility, this time to the upside. So FCX, I'm watching real closely. Copper, look at that sharp pullback in copper. The copper stocks are actually holding up quite nicely. Now, we have one in my opening call that made a 45% profit, but it was not I've got a couple of emails from people saying it just hit it for a second and their sell was not stopped out. So I like to still continue covering. I'm just very strict. We're at a 45% gain, but it's now even a little bit high. It has not fallen, that copper stock. It has not fallen today much, just a penny. So that's very good action. So I'm watching this very closely, copper. Now, before we wrap up, let me just do this one more time. Over here, right here, front page of TFNN, the coming 3-month outlook in the market and which sectors could rally or fail. Basil Chapman will be hosting a 90-minute live webinar with subscribers, only for subscribers, to his opening call newsletter on March the 30th at 6 p.m. for an hour and a half. It's more than usual. It's an hour and a half, going to 7:30. Sign up now for a 30-day free trial to access this exclusive event, but you also get my newsletter. You can use my newsletter as a guidance for your portfolios. You don't have to even take any of the trades, because I try to do that all the time. Where are we? What are we doing? Let me just quickly say, and what we'll be discussing, I gave it in the beginning of the show. Just it's a wealth of information, but there will be trades either coming up, already started, or in the next couple of days based on what I'm looking at. This is a trading webinar. It's a position play. So it's got to do with my beliefs and my philosophy about a whole bunch of things, as well as some purely technical stuff, a lot of technical stuff. That's number one. Number two is, I just wanted to do this for a moment here. I wanted to say, within the context of the markets right now, one of the reasons why I always say these are the levels to watch is because it's easy to look back and say, oh, high-grade copper made a peak F at 2.335. It broke under the 200 and explain what's going on. What's the point of that? You want to know, where would you be buying copper again? And if copper holds at 2.18 to 2.15-ish area, and then has a big burst of energy, then it's in play. So that's the way we're going to be looking at it. So go to the front page of TFNN. You'll be able to subscribe to my newsletter, and you'll be ready for my webinar tomorrow night. If you have any questions, get them in now, because I'd like to deal with them tomorrow night. Just send them to me, and I'd love to answer the questions during my webinar. I like to do that. It's on the spot. Hey, stay tuned for your swim.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.